Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A lower but indecisive doji cross yesterday that has done enough to set up the conditions for this week to possibly become a weekly key reversal. Thus, if we close on Friday either below 105.45 or over 106.40, then we'd be on. Right now we're looking at a lesser outside week for this week. The key support yesterday was the rising medium moving average. It's currently at 105.31, which effectively propped up the market after the previous session's key reversal down, a quite interesting key reversal down, and bearish engulfing pattern combination. However, apart from the February and March 2017 low support at 104.92, we have little below until, well under 104. Meanwhile, on the top side, we now have the April 2017 low at 105.68 and the 2020 low at 106.35, with a flattening short-medium moving average currently at 107.14 beyond that. So far today, not really that much, moving in between the rising medium moving average and the February and March 27 resistance, but starting to peak over that February and March 27 resistance at the moment. Cable, aka sterling against the US dollar. An indecisive doji cross yesterday, which was a strange follow-on or reaction to the previous session's quite superb combined key reversal down and bearish engulfing pattern. It was nevertheless the lowest low since mid-November last year and a second consecutive close below the slowly declining long moving average, currently 118.95. I've laid out the trend lines for a possible small descending wedge pattern formed over February, and that's currently 118.36 to 120.41. I'm not sure about it, but it does look like that at the moment. We also still have the double top Adam and Eve type formed since November last year, which still hasn't been resolved. Though as low as we currently are, it is in step in the right direction or to do so. What is interesting is that we really don't have that much support below until the old October 2016 flash crash low at 114.5. So it's somewhat surprising we haven't seen a stronger attempt lower, especially after Tuesday's action. Looking above, beyond the upper trend line, we have the May 2020 low at 120.73, and then the short medium moving average, currently 121.21. We also have the rising medium moving average at currently 120.15, but for some reason I don't value that highly as resistance right now. It just doesn't feel right to me. So far today, a reactionary move back up and away from the lower trend line, back into the descending wedge pattern, and up towards the long moving average. But its rise has been limited by that long moving average right now at the moment, though it is being tested. Euro sterling. A bearish harami yesterday, if only just, but also a possible day two in a two-day tweezer top pattern, with the market once again capped by the congestion at 89.25. Tweezer tops are an interesting pattern. Traditionally, they're seen as a bearish reversal pattern. However, data indicates that nearly 6 out of 10 times they act as bullish continuation patterns. So it'll be interesting to see if the market follows tradition or the data. Overall, the base of the market is supported by the slowly rising medium moving average. That's currently at 87.63. However, before there, we also have the rising short medium moving average, currently 88.38. And perhaps more importantly in the recent past, the 50% Fibonacci line of the March 2020 to March 22 move at 88.51. Overhead, beyond the 88.25 resistance, we have some congestion between 89.50 to 89.90 and then again at 90.21. So far today, a seeming follow-on lower to yesterday's action and also the last 2 days' actions here as well, with dips down to the 88.80 zone. But it has been a limited move lower. Limited so far. US dollar against the Indian rupee. An indecisive spinning top yesterday with a long tongue on it that pierced but did not manage to close over both the flatlining medium moving average, currently 82.11, and the slowly declining short medium moving average, currently 82.19. This action may soon speak volumes as to what the top side may have as bearish pressure. In the big picture, the market is still in between the overhead upper time, currently at 82.82, and the middle time below, currently 81.47, which are highlighted in dark green on my daily chart, and that's of the October 2022 to early January bearish shift pitchfork. A little below the market, we have the August 2022 to date uptrend, currently at 81.62, which is highlighted in bright red on my daily chart. All this leaves me with a question. Is there an ascending triangle formed over this year between the flat highs at 83 even and the bright red uptrend acting as a lower trend line? This is one for me to ponder. So far today, a dip towards the bright red uptrend, but the market soon changed its mind, has reverted back up, looking like both a hammer and a bullish engulfing pattern right now, but seemingly having doubts about progressing higher because of the overhead moving averages. US dollar against the Brazilian real. Combined bearish opening Black Mariposa and bearish engulfing pattern, if only just on the latter. Prices dipped down to the influential combination of the 38.2% Fibonacci line of the June 2019 to May 2020 move at 510.87 and the congestion at 510.93 before turning back up to close lower on the day still. The overall story here is one of two complementary and somewhat shallowly bearish patterns. The original one is the late July to late September 2022 bearish shift pitchfork, which is highlighted in dark blue on my daily chart. The market is at the moment in between the overhead upper time, currently at 522.37, and the middle time below, currently at 499.35. This pitchfork has given the overall bearish angle of attack since September, especially between the middle and upper time, and that is despite the upper time being breached a number of times. Then there is a result of this action. The November 2022 to date bear channel, currently 491 even to 541.04, which is highlighted in bright red on my daily chart. As I said earlier, these are complementary to each other, one giving birth to the other. Over all of this is the shadow of the monthly key reversal down we saw in January. US dollar against the Mexican peso. A bearish engulfing pattern yesterday of the lowest low seen here since September 2017. The market continues its seemingly relentless decline, this time testing and trying once again to make significant closes below the neckline, which is currently at 1798.07 and highlighted in purple on my daily chart, of the February to April 2021 head and shoulders top. This is just the latest roadblock in the market's journey south. I would now also point out the other multicolored bearish trend lines and tines we have on my daily chart. All have been breached and then broken, but they are still useful in pointing out the bearish angle of attack. The immediate one is the broken lower tine, currently at 18.11.22 of the late September to December 2022 bearish shift pitchfork, which is highlighted in bright red on my daily chart. Then there is the dark blue March to July 2022 bearish Andrews pitchfork, with the market in between the upper time above, currently at 18.27.58, and the middle time below, currently at 17.88.87. This was previously broken on the upside, yet the upper time has still been influential in showing the bearish angle of attack of the market. It is a bit of a stretch to suggest the market is now trying to repair this break, but I have seen stranger things. Next is the break below the lower time, currently at 18.49.43 of the March to July 2022 bearish shift pitchfork. Now, I've not highlighted this one, as I think it may need to be retired now. We next have the neckline, currently at 18.61.31 of the January to May 2021 head and shoulders top. This neckline was important back in February when it was getting tested, but it's increasingly looking like it is in the rear view mirror of this market, with a subsequent move lower after the break. This one is highlighted in bright green on my daily chart. For now, as I suspect I may downgrade it in the future. So far today, well, a fresh attempt lower. We seemingly have little in the way below until the low at 17.56.41, which is a tidy move lower, but we're not really pursuing that move lower at the moment.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.